Hi there, I'm Dean Heskin, President and CEO of Swiss America, and you are tuned into our podcast entitled The Secret War on Cash, where we take a look at some of the activities, the going-ons, if you will, of our economy, our financial system, our financial markets, as there's been quite a bit of that activity here over the course of the last couple of years in particular. I mean, things are always cruising along. That's always been the case, but there's definitely been some major shifts and major changes that look like it could be really the reshaping of our world financially speaking as we know it. I have with me today my co-host Chris Agelastos. Chris, how are you today?
I'm doing well. Happy to be here on another episode.
Another episode. Yeah, this has been, well, we're
I
over
think we're over
100
100.
episodes. 100 episodes, and we've been going now for, gosh, a little over, I think, a year now.
Yeah.
It's been a delight having you here. Thank you
Oh.
for being with me all these times. We've had a few others here as well, but you've been our steady Eddie because you always got good things to say, good things to talk about.
I
And
appreciate it.
and so today we're going to talk about manufacturing as the PMI plunges to 15 month lows, excuse me,
Mhm.
and what no one wants to hear, but prices are soaring again. Um, Now, this particular article, for those of you who have the link or may click on it, there's a little bit of bad language in it when he uses the SHIT word, but you know, it actually kind of fits for what he's talking about here. We do have a little bit of that going on in our economy, and with prices and everything. And that's, let me tell you, it's been a hot and sore topic for a while now because it is when you start talking about higher prices, they do get into how there's some higher wages and whatnot. That's a benefit of higher prices, but there's consequence to it, which has been, things are expensive. People, we've talked about this numerous times where, when you look at what it just takes to survive or exist and live these days, you've had people having to go into retirement accounts because of this. You've had people having to use credit cards to live because of this. It's an issue in our economy, and it would appear to be an issue that's probably going to get worse before it gets better. So I'll shut up, Chris, and I'll let you kind of get into this. Tell us what's going on here.
Yeah. So the big concern here is that we're seeing a slowdown, like they mentioned, of the Purchasing Managers Index, and this looks at manufacturing and also services. And basically, what it's telling us is that the economy is slowing down. And the challenge with that is it's okay for the economy to slow down a little bit if inflation comes down with it. But the challenge that we're seeing here is that we're seeing increased prices, but we're seeing slowing growth in the economy. And so the big term that people probably have heard before is stagflation. And the challenge with stagflation is that there's just no quick and easy fix. And
Sure.
and what we've had before, over the last couple of years, really, is a period of a lot of inflation. I mean, people are seeing the prices go up, but people have been able to still make a decent income. There's still enough going on out there that they can change jobs if they're not happy where they are, and maybe even get a little pay raise. So at least they can do something to help combat the inflation. But when the economy starts to slow down and people start to lose their jobs, can't find other jobs, and then on top of that, you have prices going up, right? It's a horrible scenario, and it's not something that the Fed can just adjust interest rates and fix. In fact, what's a little problematic about this is that they just did what is considered a pretty sizable cut, and we're still seeing this inflation. So Jamie Dimon was even talking about it the other day, that this is a definite concern, that we're headed down this path, and we could end up in a situation where it's similar to the 70s, where the economy is just really stuck in the mud and prices are going through the roof, and it could cause a lot of problems for a good portion of our country.
Sure. Well, and it already has and continue to cause even more problems. And adding to this, I mean, it seems like all the things that matter that we look at and track when it comes to our markets and to our economy, they're in bad shape right now.
Yeah.
And adding to it, or throwing some additional fuel into that fire. Looking at this next article here, we look at as all these things are kind of taking place. You look at where's the dollar left in this whole deal, and as the title on this article says, only 3% of the dollar's original purchasing power remains. 3%.
Yeah.
And that's it's been steadily declining, and that's really no secret to really anyone who's been paying attention. But what is interesting is, like, because of how things are kind of whipping out of control financially, meaning, like, our debt increase was what, 5% over a course of 1 month, was it? Yeah, 1 month. We covered that a few
Yeah.
months ago. To service our debt alone right now, we're paying $3 billion a day. That's 7 days a week, 3 billion.
Yeah.
And as the article talks about here, with the dollar being worth only that 3%, this article is talking about how that 3% could be zero by 2025. And that seems like, well, wait a minute, that's really soon.
Yeah.
But by the same token, as we look at, and we've covered, like, central banks have been buying up gold. Central banks who are participating nations in the new BRICS alliance, which BRICS has also been buying gold. The whole purpose of it is abandonment of the U.S. dollar, and so you already have a weakened currency that has the double whammy of really the world kind of abandoning it, and justifiably so. So, I mean, if this continues on the way it's going, I mean, do you think that's realistic that by 2025 that our dollar would have that 3% would actually turn into a big zero?
Yeah, I mean, if we go into hyperinflation, that's it's not much of a stretch to go from 3% to zero. Now, let's say it isn't that bad, and it goes from 3% to only 1%. Still very, very bad.
Right.
So we don't have to get to zero to have a problem. I mean, we're already seeing a lot of job losses in the marketplace. People are starting to struggle and find replacements for that. We're continuing to see prices go up. The government is continuing to print money and borrow and spend more than they should, more than they have a budget for. And they really haven't fixed any of the problems that got us into this mess. And going into the election, I mean, I suppose, depending on which candidate gets in there, we could see some positives, but I really don't think either one of them can completely reverse this problem, at least in the short term. And like you mentioned, all this does is give BRICS and the other nations that are working on CBDCs, digital currencies, it just gives them more ground to stand on. I mean, they're already coming after the dollar, and like you mentioned, abandoning the dollar, or at least reducing their reliance on the dollar for their reserve currency, and going to something tangible like gold, which obviously is part of what's causing the big spike we've seen this year in precious metal prices. So, I'm an optimist in the sense that I really I know we talk about a lot of the bad things going on here, and I'm not a doom and gloom type person, but you also have to just look at the numbers and accept the fact that we're in a bad situation. And again, it doesn't mean the dollar is going to necessarily go to zero, but it is going to continually fall in value with inflation creeping up. So I think you just have to be prepared for it. Be a realist, be educated on what's going on, and plan. Plan to protect yourself as much as you can. It doesn't mean you may not have some bumps in the road, but you want to reduce the impact that this is going to have on your savings and your family.
Right. You're absolutely right. And it's, really, and I agree with you. You don't want to sound or feel like you're being a doom and gloom, proponent with this type of thing. But by the same token, how do you, there's no really way of sugarcoating it. I mean, it
You're
really
right.
just kind of is what it is at this point.
Yeah.
And, as we've talked about in numerous other podcasts, like BRICS, they want to dethrone the US dollar. And by dethroning, it doesn't mean, okay, let's use something else. That is what they want to do. But,
Yeah.
Putin wants it destroyed. He wants it like gone yesterday. So,
Yeah.
this is just the reality of this current world that we live in. So thank you for all that, Chris. And for those of you
Yeah.
tuning in, if you'd like to hear or read more about this, you can do so by contacting our office. You see the toll-free number on your screen. That's 1-800-289-2646. Or you can visit us online, fill out just a few basic, put a little bit of information in. We can email you off or send off to you some materials. And you can go do that at our website at SwissAmerica.com. That's SWISS America.com. Chris, thanks for all the information. And for those of you tuning in, thanks for doing so. And if you are not already tuned into this podcast, please do so, as we'd love to reach out and connect with you more in the future. So thanks for tuning in, and have a great rest of your day.
Thanks a lot.